Hello and welcome to the Profitable Rental Podcast by Landlord Studio. I'm Logan Ransley, co-founder of Landlord Studio, and we're a property management and accounting software designed for small to medium-sized portfolio landlords. And in this podcast, we'll explore the kind of 6 building blocks of real estate profitability and success with industry experts to help you build a profitable and scalable rental portfolio. On today's episode, we have 2 very special guests with us, and we're going to be looking at some of the common challenges real estate investors face when getting started and scaling their portfolio. First guest is a best-selling author, licensed CPA, chartered global management accountant, and of course, a real estate investor. And you'll no doubt know her as the co-author of international bestsellers, Rich Dad, Poor Dad. She's also released several more best-selling books, including 3 Feet from Gold, Outwitting the Devil, and Think and Grow Rich for Women. Highly sought after finance expert and mentor. She has worked with major brands as well as served with 2 US presidents as an advisor. This is Sharon. Hello, Sharon. We're excited to have you here.
Hello, Logan. Happy to be here. Looking forward to it.
Awesome. And second guest is a real estate investor and practicing CPA. He is the founder of the Real Estate CPA, an Inc. 5000 company, and was named 40 under 40 by CPA Practice Advisor. You'll likely know him for his podcast, Tax Smart Real Estate Investors, or from one of his many guest appearances. Welcome, Brandon. Great to have you here with us today. Why don't you share a little bit about yourself as well?
Yeah, awesome. No, I'm excited to be here.
Perfect. Love to start with a bit of an icebreaker question for both of you. What's your favorite quote, and I guess why is that your favorite quote? We'll start.
Well, my favorite quote is one that is mine. It's called "Assets are sexy," and that's why I want to get people focused on buying, building, and creating income-producing assets. And we certainly are talking about that when we're talking about real estate.
I love that quote. I did not mean to laugh, but it's a great quote. Mine is, there's no shortage of remarkable ideas. What's missing is the will to execute them. I think it's Seth Godin. I see that a lot in business building, is just everybody has ideas. Few people have the actual willpower to sit down and actually get it done.
Awesome. I'd love to know, Sharon, were you always entrepreneurial? What made you decide real estate was the way to go?
Well, Logan, I've been a real estate investor since I was 10, I think. My parents were lower middle class, but they owned businesses. We lived in a little tiny house between my mom's beauty shop, my dad's used car lot. And then we also had rental properties that I had to go scrub out the bathrooms between tenants at the age of 10. Swore I would never be an entrepreneur. And that's why I wanted to be a sophisticated professional, which is how I went first generation to go to college, became a CPA, started in public accounting, one of the very first women in public accounting. And it was about the ripe old age of 25 when I said, wait a minute, I'm not in control of my life, and I'm kind of a control freak. And all of a sudden, my parents looked a whole lot smarter. And I said, they own assets. Most people don't understand. They don't talk about money. I had a home where we talked about cash flow, appreciation, depreciation. We actually talked about those things. So it was something that was just innate, and I did not realize what a benefit, a gift that I had. And I've always invested in real estate and seen it. My dad owned orange groves that are now part of SeaWorld. So, constantly learning and understanding the importance of location, but also the importance of cash flow, which of course became the name of the game that we did at Rich Dad. And so it's very, I've been in every aspect of real estate. I think it's fun, but it's also, 90% of the millionaires in the world have either made their money through real estate or hold it in real estate. So it's an important aspect of any portfolio. And so I recommend everybody start looking, and it's never been easier to invest in real estate. Even with a little bit of money, you can invest in a real estate investment trust. So now more important than ever to have your diversification across asset classes.
Yeah, super interesting. And Also quite fortunate that you were surrounded by that kind of openness with talking about finances growing up, which I think a lot of people or a lot of kids don't have, which is really, quite interesting. How about you, Brandon? Were you always entrepreneurial? How did that kind of look when you were growing up?
Yeah, I think so I lived in a solid middle class family, not on the high end, not on the low end. My parents are both engineers. They went to Georgia Tech, so had jobs, always did okay. And I think there were just some things growing up where I said, man, if I had all the money in the world, then this thing wouldn't matter, right? So I went into college thinking I wanted to. I like had a couple small business. I did like a little mulching business. I did like a lawn mowing business when I was in high school. But I went to college thinking, all right, I'm really going to work my tail off to get the best grades possible to come out on the other end of this with the highest paying job possible. And so I double majored in accounting and finance. I got a job at PwC. I think they were paying me $63,000. This was back in 2013. So when I learned that, I like when they said the salary on the phone when I was accepting the job interview, my like jaw hit the floor. I thought I'd made it. I thought I was like super rich. And then kind of like Sharon, you kind of get into it and you're like, oh wow, like I don't have any control over not only my income but my life. So when I was 25, I also launched my own business, and that's when I kind of broke away from Big Four, started doing my own thing. So I always kind of had it. I was always like experimenting with stuff, but nothing ever stuck. Like I never really. I like did a shirt business in college, and I did something like small concession thing in college, and none of it ever really stuck. But when I got my CPA, I found bigger pockets, and I just started answering tax questions. So I was like 24, and I sort of got addicted to this positive feedback loop of I have this tax question, I provide the answer. They go, oh, thank you so much. You're amazing. Right. And you're like, oh yeah, this is nice. I'm not getting any of that at my day job. So I'm going to just keep showing up to this online forum with all these strangers. And you do that enough and your picture keeps showing up enough. And now people are like, wait, I recognize that Brandon Hall kid. I'm just going to DM him and see if he's taking on clients. And so then I just got a few of those coming in and I was like, you know what, maybe I could just do this. I've always wanted to own a business. I've always tried to do this. And that's how I started my firm. All Bigger Pockets forum posting.
Simple as that. I love that. And we've been a big part of the Bigger Pockets forum and community as well. And it's actually surprising how many people are quite oblivious, even to the kind of tax and accounting questions, even when they're like quite deep into their real estate journey. Which I guess is why we're quite keen to cover off some of those questions. From your perspective, Brandon, what are some of the kind of biggest challenges you've seen, or even yourself, faced by real estate investors when they start to, I guess, expand their portfolio, and how do you see them being overcome?
I would say the biggest challenges that we have seen that real estate investors face,
yes,
like when they're trying to expand. Yeah. I think that the first thing is just not knowing what you're getting yourself into. Real estate seems incredibly complex from the outside. I remember being in college, I took a real estate class and I thought that only super rich people owned real estate and that there was no way that I would ever own real estate. That was like a belief that I had, and actually read the Rich Dad Poor Dad, the real estate version of it. And I was like, belief system unlocked. I can do this. I think first it's just understanding that it's not nearly as complex as you think, but it's still a business and you have to underwrite your deals appropriately. So I think people make mistakes at the beginning that they later overcome just through experience. But I also think one of the other major challenges is just, real estate being a business has a lot of moving parts, right? If you are an unorganized person, you need to somehow fix that problem at the beginning. You need to outsource your accounting. You need to outsource your paperwork. You need to get an admin. You need to do something, because otherwise, like if you feel like you're this deal maker vision, you're great at finding deals and putting deals together and raising capital or whatever, that's great. But the admin work will bury you. So we see a lot of people in our client base at the beginning have kind of struggle with this idea of building a team because they're working W-2 jobs. They've never had to really build a team before, right? Like they're a leader, they're a manager at their W-2 job. They know how to kind of manage white collar professionals, but then all of a sudden you move into real estate and it's a completely different ballgame. You got to learn how to build a team. We see a lot of people struggle with that.
Yeah, very interesting. And I guess this kind of segues into a question for you, Sharon. What are some of the mistakes you made early on in your real estate career, and how did you kind of overcome them, or what was the biggest things that you learned to overcome them?
Well, I've been in real estate for a very long time, young men. So I've been obviously made a lot of mistakes along the way, but I don't call them mistakes or learning opportunities. And one of the things that I learned very young is to have that team and have the people around you, and don't assume that you know everything there is to know about real estate. Obviously, I had the benefit of understanding this money side and knowing the numbers. And so the number of mistakes I have on my chart are pretty small, but we had one big one in 2008. I was quite proud of myself. We'd gotten rid of our apartment complexes in 2007. So we sold high before the market collapsed. And we had a long-term tenant, grade A tenant in a large commercial property that we had. So we thought, well, this one's going to, survive the storm. Because again, it's about the cash flow, not about the value. And unless you have a clause on your debt that says loan to value ratio is important. And so we got caught on that one, and our tenant up and moved out without no indication that it was an issue. They had a long-term lease with us. So obviously we were upside down on that building, and we lost about $1 million on the building, but I don't really look at it as a loss, because over the 5 years we owned it, we profited probably 10 million on the property. So for me, it was a very nice net positive. So it's an interesting, you have to really look at being aware of what's going on. What I see a lot of people doing in real estate is that they put their head, they buy it, they hire a management company, and then they forget about it. And they take their finger off the pulse. And that's another thing we've learned along the way, where all of a sudden I'm looking at the numbers and I'm going, something don't look right. So I have to have a conversation with a property manager to find out, oh yeah, well, they started adding this upcharge without talking to us about it ahead of time. And so those are whether you have the right team or not, you are still responsible for your investment. And so you need to educate yourself. You need to know your numbers. You need to understand them and be able to react accordingly.
My theory on what you just said, Sharon, and I would love to get your take, and sorry to interject here, but so our firm, we provide accounting services for landlords too. And what we have learned is that if a landlord is making these investments but has a W-2 job and they're earning $500K or something, the investments that they're making are not creating any meaningful cash flow impact on their life, right? They're already making $500,000. Like, it's not that big of a deal to earn another $500 a month in rental income for my single family home. And so what happens is, this is my theory, but I'm pretty sure it's accurate. What happens is they just don't do any of their accounting. They don't look at the property management statements. They kind of just look at their bank account every month. And if it's going up a little bit, they're fine. If it's going down a little bit, they might start looking into the PDFs and try to figure out what's going on. But it's their secondary income stream. And to them, it's insignificant compared to their primary income stream, because we see this complete shift of mindset when you are a full-time landlord. Now it's like, we're very sophisticated. We've got systems in place. We've got accountability measures. It's like people just care more. I would love your take on that.
Well, I think that there's a huge element of truth in what you're talking about, but I think the underlying cause is a lack of financial education. And so they got an employee mindset, and they are fortunate in being a highly paid employee. All right. There's a term called Henry's using the insurance, high earners, not rich yet. And so with people that rely on that W-2, they get comfortable, they get complacent, and then they have a crisis. And all of a sudden that rental property they have is still giving them that money every month, right? And so I think it's really a lack of financial education and understanding money and how it works. And so that they don't pay attention to it. And you're exactly right, but they don't know how to pay attention to it because they've never had to. All they look at is their bank account because their paychecks get deposited twice a month. And then this other little thing that drops into the account is kind of like interest on a bank account. And so, I think there's a lack of attention, also a lack of education.
It's really interesting you bring that up because we have a spike in interest in our product once a year. Kind of like an outlier once a year where a lot of people come in right before tax season and they're like, crap, we need to do all of our accounting because our accountants or CPA is asking for it. And so they panic and then they get the software and then they start using it and then they realize the benefit. But we're trying to educate users and landlords about this mindset of actually going through a full year and actually staying on top of this stuff, because otherwise you just get lost in the weeds. It's quite fascinating.
Well, there's nobody to be accountable to, right?
Exactly.
Like if I'm just accountable to myself, but I've got a 500K W-2, if I don't have the financial education, very good point, then I just don't understand why it's important, right? And I think that's very hard to train. We've been trying for years. It's very hard. We've actually identified that our best landlord clients are those in small partnerships. So not necessarily like these massive syndicates or funds. We do the accounting for them, but the best clients for accounting services that we provide are small partnerships. So it's like you and 3 of your friends get together. Well, guess what? Somebody's going to ask about the finances on an ongoing basis. So all of a sudden we need to have a way to account for everything.
And there's a lot of loyalty and responsibility in that relationship because it is your friends. My friend, blood and money doesn't mix too often, and friendship and money. I always tell people, if you're going to go into business with somebody, plan the divorce before you get married to them, because things get crazy. Understandings going into something are very different 5 years down the road. So it's important. But I think you're right, Brent. I think that's where people talk about it. And so it's more of a conversation. But I think people that are well off, that have a few real estate properties on the side, they just don't pay attention to them. And so all of a sudden they look at it and they go, well, this property was putting, $1,000 in my bank account. All of a sudden they're asking me for money. Wait, what's going on? That's when they wake up and say, hey, what's going on? That month you get the call from the property manager, say, we're negative this month. We need you to give us a check. Then you go, what? You look at it, it's like been happening for 6 months. So that's just a lack of attention.
It's a good segue into a question actually about this whole accidental landlord term. So we understand there's a lot of landlords that end up with a rental property by accident, whether it's inherited or they can't sell. I guess what would your advice be to somebody who has an accidental property, I guess, or rental property, and what would your advice be around someone who's realized actually the potential to grow that into something meaningful and actually leave their full-time job? How about you start, Sharon?
Yes, that happens a lot. And I think the people that succeed are those that find the right people to support them and help them, the right management company, the right accountant, the right tax person. My entire career obviously has been as it relates to accounting and finance. And there are some great tax CPAs and there are some not so great tax CPAs. And so you have to find, the first question I tell my clients is ask them how many real estate properties that they help people manage, so that they're not learning on your dime. So you want to make sure you have the right people on your team, people who have experience with what you're going into. And when you say accidental properties, right now, certainly in the last 3 years, there's been a lot of new accidental revenue streams that people have found the ability to create because of what's happening in the world. And I have one client who had an RV and she parked it on her property and got the license, and now she's making money on it as an Airbnb. So people are getting creative. When we get into a crisis and there's chaos in your life, you got to get creative and curious again, like we were when we were little kids. And so real estate has such functionality. I mean, I have a neighbor down the road. We live on, large lots, and they to turn one of their horse pastures into rental for people's RVs so that they can have an additional cash flow stream. So again, it's just a matter of looking and seeing, how can I make more money with the real estate that I have? How can I generate it? My dad loved orange groves because he didn't have to go there very often, but he got cash from the oranges being taken off every year. So creativity, curiosity, and looking at what else can I do to increase revenue streams.
Yeah. How about you, Brandon?
I'm a big believer of focus. So, if you're becoming an accidental landlord at a point in your life where you don't have time to focus on setting up systems and running this team, then you need to be okay with not making nearly as much money as you otherwise could have during that period. I am also a big believer that everybody should own real estate, because I think that, for the reasons that Sharon was mentioning, it is just a great asset class. So even if you are an accidental landlord, you should still try to figure out a way to make it work, but understand that it does take work, and you have to figure out how to build your team in a way that is going to support the lifestyle that you're currently living. Now, and that can change year to year. It can change every 5 years, 10 years, whatever. But I've seen people who are extremely busy jump into landlording and not realize that it's not passive, like social media influencers would love for you to believe. And then they go, well, I gotta liquidate this. And that might be the right answer with that asset. But if you acquire these assets, and I know we're talking about accidental, but just if you're acquiring an asset, price in management, price in this team that you're going to have to build. Otherwise, you're going to self-manage that thing to make money. And that's fine as long as you're ready for that. And I've just seen a lot of people not be ready for that.
That brings us to the conclusion of episode 1 of the Profitable Rental Podcast by Landlord Studio. If you like this episode, give it a like, a share, and subscribe to our channel for episode 2, which is the second part of our conversation with Sharon and Brandon. Give Landlord Studio a follow on socials at Landlord Studio on all platforms, where we share more tips, advice, industry news on all things real estate. So you don't want to miss out on any of that. And make sure you stay tuned for part 2 as well of this podcast, because it's a really great one. And I know that you don't want to miss this. We dive into a lot of the detail in that following podcast episode. So until next time, we'll see you then.